Hi there, Alec Hogg coming to you with the Biznews Global Share Portfolio for July 2016. It's now 19 months since we started. Our annualized return on the portfolio is 25%. A lot of that has been due to the fact that the rand has weakened over the past 19 months. We'll get into the detail in just a while. But the good news is that every single constituent of our portfolio rose in the past month. If you recall, a month ago, we seemed to pick it really poorly. Stuart Lohman is with me here, the Biznews managing editor.
Thanks, Alex. Good to have you back in Joburg.
Yeah, and I see I brought some good weather. The weather over in England has been, literally, it's been in the 30s, 33, 34. Complete heat wave there. So I guess global warming is making the muddy island a little less muddy.
I was going to say you brought with you a little tornado to Joburg yesterday, but it's a lot of unexpected events this year.
Indeed, indeed. Yeah, well, that's kind of the least of our worries at the moment. But when we get back to the portfolio itself, every single member of the portfolio in the last month was up, and there was a huge bounce for Alphabet or Google. That was up $70 a share. The rand improved from 15.20 to 14.35. So when you put it all together, the portfolio in US dollar terms was stronger, and the rand was stronger as well, one offsetting the other, remember, because we convert everything back into rands. And as a consequence of that, our portfolio, in fact, did very, very much better. But it was interesting, Stuart, because last month we couldn't have picked a worse day. We picked the worst of the worst days to do our broadcasting, which is not a bad idea because it does bring you down to earth a little bit.
Yes, true. What was the day after Brexit, Alec?
It was, I think it was the day after Brexit. Yeah. And we were sitting at an annualized return of about 21%. That's now picked up to 25%, which shows you how markets can move. But remember, this is not a portfolio that has been built so that you can trade it day to day. It does give you some really good opportunities. And in fact, Apple came up with their results yesterday, and that share price bounced strongly, a result of the numbers, which again we're going to get into in just a moment. That was up by 5.5% in the after hours trading in the United States. Another one that's bounced very strongly is IBM, also with their quarterly results. So we've got Amazon coming, Alphabet. Hopefully Berkshire will be able to do better as well. So all round, our portfolio is well positioned, and we're looking forward to continuation of the trend. And I guess that's why when I sent out a tweet this morning, it was to say normal business resumed. We hope that the portfolio, although it is a long-term bet, will continue with its normal business resumed, i.e. moving in the right direction. Okay, let's get through the individual, and that's what you can see where we are at the moment. Interestingly enough, the S&P 500 index, and I like to always repeat the overall strategy of this portfolio. When we began it in December 2014, it was on the basis that we felt that the rand was going to be a fundamentally weak currency. And the reason for that is the developmental state ideas by the politicians in South Africa will not do the economy any good. So that's really where we started off. The basis was you can take all your money and put it into US dollars if you like, but we can do better than putting your money just straight into US dollars by investing in the equity market. And if you have a look at Vanguard, which is the top of them there, that is a index tracker. So what that does is it replicates the S&P 500 index about as close as you can get it. And in the 19 months since we have been running this portfolio, that is up by 5%. So if you'd taken all your money and you'd put it into US dollars, you would have clearly improved by that amount. Had you taken all your money and put it into Vanguard, over the period you would have improved by 5%. But as you can see, when you go down the portfolio, right to the bottom where it says total, our total portfolio is up 16%. So we have outperformed the market with these stock picks by 11 percentage points since starting. That is a very satisfying return, any way you want to look at it. Of course, we've been very lucky We have Amazon in there. You can see up 124%. This is in US dollar terms. Also a good move by Alphabet, up 38%. And the other one that the market generally was Novo Nordisk, which was up by 22%. That's interesting. We seem to have perhaps somebody who's giving us outside influences. All right, whoever the outside influence is, please leave us. I know that things are getting a bit hot in this country. I didn't think it was that hot, though, Stuart. Okay, so that's the overall portfolio. As you can see, we're up by 16%. What has been good, though, is during this period, a lot of the stocks have underperformed for a period of time and then come into their own. Indeed, we were sitting on Amazon, which went backward for a couple of months after we bought it or brought it into the portfolio, and then, of course, it just took off. IBM has done something similar. You look there now. IBM is actually up 9% on where we acquired it, and Berkshire virtually break even after being down quite a lot. So it just shows you once again that what you need to do is to make sure that you do your active analysis, and then you put the stocks in the portfolio, and for the most part, just let it run. Here's in the rand terms, and this is the one that we need to consider as we are investing in South African rands. The portfolio overall is up by 40% since inception. That's 25% annualized, a very good return. Had you gone for just the rand, you would have had a return annualized of 17%. So we're 8 percentage points better than the South African rand, or had you just put your money into a currency account. And as you can see again, the figures there are very impressive for Amazon, which has pulled us higher. The laggards, Barclays, which we only bought, unfortunately, just before Brexit. When you talk about bad timing, it looked brilliant for about 2 weeks. And then Brexit came along and the price collapsed. Well, it has improved a little. In fact, it's improved considerably in the past month, and we do think that it will be moving in the right direction. But just to bring all of those into context for you, in the past month, Alphabet, that's Google, the old Google, now called Alphabet, that's up $70 a share in the past month. It's had a fantastic run. Amazon is up $40 a share, also very good. Apple Computer is in fact up $10 a share after last night's disclosure of its quarterly results. In our portfolio, though, we've only taken into account $4, which is where it closed last night. So we got a nice little improvement there on Apple as well, which will take the loss to Apple in rand terms down to about 5 or 6%, which is now starting to look a lot better than where we were at one point. Barclays, in the last month, it went up 12p, but of course the pound fell against the rand, as it did against every other currency, and the pound, which cost you 20 rand for a pound a month ago, it now costs you only 18 rand 84, a whole lot better than 3 months ago when it was costing you 24 pounds. Ask me. Berkshire Hathaway up $6 a share in the past month. IBM, on the strength of its financial results, $20 a share higher. Novo Nordisk also $4 a share, and just to add to the party, the index fund Vanguard up $15 a share. So it shows you that the portfolio overall has returned 8% better than the Vanguard return, than the Rand return. So our strategy so far is working on both points. On the one point being that we think the Rand's going to be a weak currency, so we're benefiting from Rand weakness. On the other point being the stock betting that we're doing in the United States market. And improving on that way. So just tell us how the questions work.
Yes, Alec, if all the listeners are just on the right-hand sidebar there's a little question and answer section. If they just plot the questions in there, we'll do them verbally online. So that's all good.
All right. So is it easy enough to
We've had a few technical questions, but it looks like all the sound is sorted. So.
All right. Great. Super. Sorry about that with the sound. Maybe that was what our little interference was a minute ago. And let's move on. We'll take questions as they come in. So if you do have a question that you'd like to discuss, please jump in. There we go. The rand, the prices at opening versus the prices today. Remember, we did start the portfolio. In fact, we started in the September 2014, and then we decided to change the base. So after having quite a nice run for a couple of months, we stopped again and resuscitated from December 2014, which gave a lot more people an opportunity to come for the ride. As you can see, since then the rand from 11 rand 27 to the dollar, 14 rand 35. So although it's improved in the last little while, the rand has still declined on average or annualized by 17% since we started the portfolio. And there it gives you a very good indication of how the individual constituents worked. Apple virtually wiped out now that loss after the financial results beat the market's expectations. Barclays being the single laggard, but we think we can live with that. We do think that there's a longer-term reason why Barclays will do better. It's offering excellent value. And there's the graphical illustration. As you can see, Amazon, but you can't see so well because the graph is a little bit squashed. I apologize for that, but it shows you that 3 constituents of the portfolio have done far better than the rand. A fourth has done okay. In line with it, these 2, Berkshire Hathaway just a little bit lower, and then our 2 losers there being Apple and Barclays. I don't know what happened with that. Apologies. This is the dividend receipts. No dividends were received in the past month, so no update on that side. And let's get into the individual constituents. This is the S&P 500 index, which is reflected in the Vanguard exchange-traded fund. If you like, it's the American equivalent of the Satrix 40, excepting that there's 500 shares, the American market being a whole lot bigger than the South African market. And they literally overlay each other, and that's the way it should be when you are investing in a index fund. Vanguard has improved in the last 12 months by the number that you see there, just over 3%. Moving on to the next one, and here's one of our 3 bankers, Berkshire Hathaway. It hasn't been the best performer on the American stock market in the past year. In fact, it's been rather disappointing for us since inception. But I'm not at all worried. I do believe that Berkshire Hathaway, the green, by the way, is the market as a whole. That's about 3.5%, as you can see in the last 12 months. Berkshire has level pegging in the last 12 months, but it's come a long way from where it was in the beginning of this year. Berkshire is like an index fund itself, but over time it's proven to outperform the S&P 500. So although things haven't been going that great in the last 12 months, as a long-term bet, I'm still very happy to be with Warren Buffett.
Alec, just quickly from Robert DeFoss, he asked if there's any comment on the Deutsche Bank DBX USA fund as an overall USA fund, and just any ideas on the overall US economy.
Starting off with the DBX fund, we are in South Africa, there's restricted if you're going to put rands. If you're going to use rands, then the DBX USA fund is a very good option. If, however, you're going to invest that 1 million rand that you're allowed to in the offshore markets, then Vanguard is a far better option. Vanguard, when you invest in an index tracker, you should be going for the lowest possible cost. And Vanguard is 5 basis points. In other words, 0.05%. 1/20th of 1% is the fee that you get charged by the Vanguard fund, which makes it so much cheaper than anything that is available. So if you've put your 1 million rand into WebTrader, and you can do that without asking for any permission from anybody, even if you don't have your tax up to date. Every South African is allowed that 1 million rand, so you can switch that across. It's when you go over 1 million rand and you start asking for special permission that you have to go through the exchange control hoops. But up to that point, you should be investing through WebTrader straight into the Vanguard index tracker. If, however, you've already used that million and you've got rands to spare in South Africa that you can't take overseas for one reason or another, it's not a bad option. It's not a bad bet. As far as the US economy is concerned, we have to remember that although we do have a slice of our portfolio in the S&P 500, so in other words, really focusing on the US economy, a lot of that is already international, so many of those companies will be offshore. But our portfolio, if you look at it, each of those stocks that we have in the portfolio have been carefully selected. So they are, in many ways, apart from Berkshire Hathaway, not vulnerable to any shocks in the US economy, or not the profits or the sustainability of the business is not that vulnerable. In fact, Berkshire is quite a defensive stock if you're worried about the US economy. We are going to have an update on how things are going there tonight, I think, Stuart. Janet Yellen?
Oh, yes, sorry, like the US Fed media. It's got
so we'll know tonight what is happening on that one. So, but the world is not in a great state at the moment, but that doesn't mean that you can't find stocks or individual companies that are benefiting. We are riding the disruption wave, and as a consequence, we're in stocks that we think are just going to be shooting the lights out into the future. And the first of these you can see on screen now is Alphabet. Hope that kind of answers the question properly. Alphabet is the old Google, and as you can see in the past year, it has outperformed 17%. The NASDAQ, which is the index that it is benchmarked against. In the past month, Alphabet, or let's talk about Google. It's just easier to understand because Google is, well, over 90% of what the Alphabet business is at the moment. They've got a brand new competitor who could be quite a scare. A business called Verizon, which is a US telecoms business, has been moving quite aggressively into the space that that Google and Facebook currently dominate. If you have a look at the digital advertising expenditure for this year, it's estimated that Google will pick up about $26.5 billion. This is for the US. Facebook about 10, Microsoft 3.5, Verizon, after its acquisition of Yahoo for $4.8 billion, that's just gone through, is now pushing up its share to about $3.5 billion. So just to keep that in context, Google 26, Facebook 10, Microsoft and Verizon 3.5, and there really aren't any other players in that market. But Verizon is a potential threat. The acquisition of Yahoo for $4.8 billion it looks a snip. If you consider that when Marissa Mayer, the chocolate box blonde, left Google to go over to work for Yahoo, she was heralded as the inspirational leader who was going to transform the business. She did a bit of a Koos Becker deal there. She threw mud at the wall and hoped some of it would stick. That's what Koos did in the late 90s and the early 2000s. And in that process, he found Tencent, which he bought when there were only 30 people. Now it's by far the biggest the biggest part of Naspers' portfolio and one of the two biggest internet companies in China. But Marissa has bought 60 startups in the last year or so, costing her company $3.3 billion. Now imagine this, Verizon's going in there, it's buying Yahoo, it's got all the base that Yahoo has, all the users, the advertising that comes through, although the advertising is on the slide there, but it's got all of that content, plus bets on 60 startups that Marissa May has done all the hard work for, and it's only paid a premium for the non-startup costs, if you like, of $1.5 billion. A very, very good deal for Verizon. They are merging that together with AOL, which you would probably know best for Huffington Post, or those of you with long memories would know during the internet boom, AOL was merged with Time Warner, and it became AOL Time Warner, and famously that was demerged later when it was a disaster. But AOL's still around. Huffington Post is a strong part of AOL. They've got other businesses as well, and they bought that last year for $4.4 billion. So Verizon has spent, call it $10 billion to get a significant slug of a market that Google and Facebook have been dominating and are looking to increasingly make further acquisitions and to give another option to advertisers who at the moment are kind of having to go to those two. Interesting story.
Just on Koos Becker there, Alec, Gerard asks Alphabet versus Naspers.
It's a very good question. you really are then taking a bet of Tencent versus Alphabet. And I'm inclined at the moment to stick with Alphabet. Tencent has had a fantastic run. And remember, just to put that into context, Naspers, if you take its market capitalization, in other words, the value, what you're getting when you buy the shares, you're actually paying for its stake in Tencent, and you're getting everything else for free. So you get multi-choice for free, you get the newspapers for free, the Mail.ru, which is a big company in Russia, some of the other interests in South America, all of that just comes along for free. But this is not unusual. When you buy into a company that has a stake in another company, there's always, or generally there's a discount, excepting if you happen to be PSG here in South Africa, where they put a premium on Yanni Mouton's deal-making abilities. But for most companies, there is a discount between the value of your investment and what you would pay on the market. So Naspers has got its appeal, but right now it's not. Tencent is still playing in the Chinese market. There are some very serious questions about what's going on in China. And if you are a believer in the market process, if you believe that the market system is more efficient than a centralized command and control system, and it's not to say that China is what would be typified in textbooks about communists management. Certainly the economy in China is very free relative to where it's come from, but it still has that dead hand of the state there, whereas in the United States, the whole country has been built on unlocking human potential. Just to put one small little thing into context here, if you are doing cars like Biznews in the United States of America, you can start up tomorrow. There's nothing to prevent you from doing that. The market system, if you're good enough, you'll get traction. In China, you need a license, and then once you've got a license, before you can publish anything, it has to go through a censor. So if you consider the difficulties that one has to expand your business, or certainly to promote free speech, which is what Tencent has always had an issue with, then you do know that you'd rather be with a horse that's running freely.
Just quickly, Andrew asks, it was back on the DBX discussion, would it be a good hedge against any recession that may happen in the next few months? I'm assuming
South African recession. My feeling is that you have to look at the big picture when you're taking a bet on the DBX tracker or on Vanguard or indeed on the Biznews global portfolio. And the big picture is when you have a look at the way the South African economy is being managed, and you have to either believe it's being well managed or poorly managed, because the rand will eventually reflect that. The South African economy, sadly from my perspective, is being managed as a developmental state. Clearly those who are making the rules have not learned from Venezuela. They have not learned from the lessons of South America. They still think that human beings are smarter and that the state is smarter than the free enterprise system. And as a consequence of that, they will learn the hard way, as has happened through history. So when you're an economic historian, you just have to know that this is a really, really bad approach that's being taken. But it is being driven by politics. Politics trumps economics in a developing country. And South Africa is a developing country. So as a consequence of that, if your economy does not grow, if you're not able to deliver the returns that you need, you have to make it appealing for people to bring money in. Remember, a developing country, another definition is you are developing because you need capital from other parts of the world. Developed countries export capital. Developing countries import capital. So if you're importing capital, how are you going to import capital to South Africa? You have to make it more appealing, and you do that by depreciating your currency. That's just if you want a real simple basic economics 101. So yes, anything that is hard currency based is a hedge against economic downturns in this country.
Electric quickly from LH on Deutsche Bank. I think the company Deutsche Bank, not the DBX. She says, fallen tenfold in the past 10 years in US dollars. Given the euro crisis, what are the chances of them going bust?
Going bust? Oh my goodness. Deutsche Bank is probably too big to fail. it being the size that it is, and the Germans being as meticulous and disciplined as they are, it probably is priced to go bust. But remember one thing about banks, and this is why we haven't been terribly enthusiastic about banks. Barclays was a special situation. That's why we invested there. But banks generally, the rules have changed dramatically after the global financial crisis. Up until the global financial crisis, banks could leverage themselves to a point where they could make superior returns. Post-global financial crisis and the outcry after the bailouts, the regulators have caught up with banks, and now banks are really like utilities. You're looking at a bank in the same way as you would be looking at an electricity provider or a gas supplier, that they are heavily regulated. The government won't, because they're so heavily regulated by government and the compliance levels are so high, they're never going to well, not never, never's a long time, but it's unlikely that they're going to outperform in the short term. You have to look, if you're investing in banks, at special situations. We like Barclays. Barclays trading at 2/3 of its, in fact, it's now around about half of its underlying assets. And its business is high street, where in the UK primarily, of course it's got international corporate finance businesses as well, but the high street, that's where the value of that brand lies. And there, the Brits don't change bank accounts. 1% a year change their bank accounts. Not a terribly competitive banking system at a retail level in the UK. So Barclays extremely well positioned. They're in the process of selling Barclays Africa, and they've done that in a very smart way. So there's a big capital injection there. They're coming from a low base. We like that as a special situation. As a banking sector overall, Warren Buffett, if you go onto Biznews and you can read the transcripts of the entire Berkshire Hathaway AGM this year, he said of the top 100 banks, maybe 5 he would invest in. And he's already got 2 in his portfolio, and the one is Wells Fargo and the other one's Bank of America. I don't think Deutsche Bank is going to make is one of the other 3, so perhaps that answers the question. Here's our superstar, and it continues to be a superstar. It did come very close to the market. As you can see, the blue line is Amazon. Earlier this year, the share price, however, has been on a rip thereafter, up 40%, or outperformed the market by 40%. This is NASDAQ, its benchmark. And Amazon, when you are based, as I am at the moment, in the UK, you can realize why people are finally clicking to this incredible business. The world is being Amazoned. And the news that came through in the last little while for this company in the last month has been very positive. The first one is they have gone into a partnership on financial services with Wells Fargo, Warren Buffett's favorite bank, because he owns 10% of it. What they're doing there, it's a little step in the right direction, but if you consider how big Amazon is already and the way that its retail footprint in most countries in the world, most Western developed countries, if you order something from the post, it actually arrives. We in South Africa don't understand this because it's very rare that you would send something of value through the post. In the UK, credit cards arrive, similarly in the United States, and when you buy from Amazon, it is in fact delivered to your doorstep, either through the post or through a delivery service. That gives this company an enormous footprint and an enormous reach. Now it's moving into financial services very slowly, as it's done with new products. With this partnership with Wells Fargo, they are offering student loans to start off with at 50 basis points cheaper than the overall student loan market is available. So that's what they're starting with. The other thing, which is a huge breakthrough, is that Amazon has desperately been trying to reduce the cost of its distribution. You can imagine it's very expensive to put, we bought last month some Koki pens to write on a whiteboard, and they cost £2.50. And literally somebody came to our door and popped it through the postbox. So it must have cost Amazon much more than £2.50 to get it to us, you would have thought. So they've been working on this to try and offset the cost of delivery. And this morning, indeed, news has come through that Amazon has struck a partnership with the UK government where it is going to be allowed to deliver its products through drones. in UK suburbs. This is the first time it's won permission to do so anywhere in the world. It's been fighting with the American government and got caught up in a whole lot of treacle side. But it seems like with the Conservatives in power and Brexit now behind them, they will be becoming even more friendly towards business. And that's it's going to make a huge difference to Amazon's margins if it can literally have guys sitting in the head office playing. Can you make what a lekker job, eh? Wouldn't that be a great job to have, where you play with the drones and send them off to go and deliver at people's houses? And what happens there, Stuart, because you'd think, okay, well, if you leave it on the doorstep, isn't someone going to come past and steal it?
Yeah.
It's not the culture. The culture is no one will steal it. The company that has, or the part of Amazon that's been putting this together is called Prime Air. They've been working at it since 2013, and they're looking forward, of course, to get into the market at last, with Amazon pilots now being able to fly multiple drones at one time. The other bit of news from Amazon in the past month is that it's Prime Day. It has a day, they call it Christmas in July. This year, the sales were up 60%, 60%. So that initiative, which has been going for a little while now, is gathering more and more momentum. As Buffett said, the world is getting Amazoned. Believe it, we would never be selling this share. Moving on to Big Blue, and at last, Big Blue is starting to come into its own. I'm afraid I've got the wrong graph here for you. I've got Amazon's graph instead of IBM's graph, but anyway, that doesn't stop the story. And the story for IBM is that the quarterly results were released in the past month, and those quarterly results were very pleasing indeed. Although revenues are down again, and I don't know why the media obsesses about this, IBM has told us in no uncertain terms that they are moving away from their legacy systems into new areas, what it calls strategic imperatives. Analytics in the cloud, analytics, by the way, would include very, very deep analysis. They have a product called Watson, which analyzes big data more efficiently than any other option in the world, and it is there where they are making great strides. Remember, IBM has got relationships with the top 100 global companies already because of the hardware that it has installed. Anyway, analytics, cloud, mobile, security, social, those are all areas where it is focusing. Revenues in those areas are now 38% of the business. They were up 12%. The other parts of the business, who needs an old mainframe computer if you can put all your information on the cloud? Those parts of the business are coming under pressure. They knew they were going to come under pressure. That's why they've been moving away. And finally, the penny is starting to drop. They've also been increasingly buying companies which would slot well into their strategic imperative areas. They spent $5 billion on deals there in the first 6 months of this year. I like still very much what's going on at IBM, and my goodness, you could have got the shares at about 130 just a few months ago. They're now at 160, still offering great value, still $10 cheaper than Warren Buffett bought in at. So IBM, very happy to have that in our portfolio. Novo Nordisk as well. This is a good dividend player. It's underperformed slightly the market generally, but it's not a worry. Remember, this is it has an enormous slug of the insulin market. People are still getting sicker. They're still eating too much sugar. Until we see a reverse in that trend, we don't have to worry about Novo Nordisk. No news or no big news coming out of the company this month, excepting that some analysts are starting to see Novo Nordisk as a good opportunity again. Apple Inc. Okay, financial results out last night. Up to this point, Apple has been the disappointment, or one of the disappointments of the portfolio. As you can see, underperformed the market by 21%. That is up until the results. That you can cut that now to about 15%. The shares bouncing strongly in the last in after hours trading. Reason for this is that Apple beat the market, as did IBM, by the way, on its numbers. Apple beat the market quite comfortably. I'll give you some of the numbers because they're quite relevant. On profits or earnings per share, the market expected 139. It came at 142. On the number of iPhones sold, market expected, these are for the third quarter of 2016. The market expects, sorry, the second quarter, it's third quarter, it's for third financial quarter, but the second, the 3 months to the end of June. Market expected 39.9 million iPhones, 40.4 million iPhones were sold. It expected 9.1 million iPads. The new iPad is taking off. 9.95 million iPads were sold, and so on. It's sitting on cash of $231 billion, which is an extraordinary amount of money for a company that's market cap is about 500 well, it's almost half of its value is sitting in cash in the bank. So, and you got the Apple brand, and you've got great products. This new SE model, by the way, has been selling far better than analysts anticipated. And what Apple was shouting about was that its services revenue was up 19 billion in this period, and it's now got to $6 billion in the quarter. That's 6 billion out of 42 billion, so it's not by any means a huge slug of the business just yet, but the returns that Apple is getting there, the margins, the profit margins it's making there are far higher. So like IBM, Apple's moving into the services business and being pretty successful at it. An interesting development at Apple is that a gentleman by the name of Bob Mansfield has been switched. He's a veteran at the company. He's been there for 17 years and led some of the biggest and most challenging projects at Apple during Steve Jobs' time and subsequent to that. He has been switched to run the very, very secret electric car project they're busy with. So I've been asked before by some of the participants in this seminar, in our monthly webinar, would we be investing in Tesla? And I love what Elon Musk is doing. Who can't? Who doesn't love it? But with Apple and Google looking to try and eat Tesla's lunch, you just got to worry a little bit if those giants start coming after you, particularly Apple. They are looking for a new line. It's likely that they're moving into electric cars at some stage. Google, we know, are definitely moving into that area. They are already the global leaders in driverless cars, an area where Elon Musk has had his difficulties in the past months with the first fatality in a driverless car by a Tesla. So it's a fascinating area. When you look at these big giants and they're taking each other on. We, however, are very happy with Apple. It's one of those things that one day we're going to wake up, there'll be an announcement from Apple, and the share price will rocket because they've done something spectacular. They're a very secretive business. They've got huge amounts of cash. They're buying back their own shares at a significant rate. Warren Buffett's portfolio has bought Apple shares, and he hasn't touched technology for a while. He did admittedly say it wasn't him; it was his two portfolio managers, Ted Weschler and Todd. Forget his name at the moment, but the two of them that had actually gone in and bought Apple shares because they were just too irresistible. Well, after the latest set of quarterlies, you can understand why. And that's just to bring everything back into perspective. Barclays have only been in the portfolio for a couple of months. Unfortunately, our timing there wasn't that great. As you can see, the Rand cost price of Barclays was 36 Rand 33 per share. It's down at 28 Rand and 7. So that's been the worst, down 23%. Apart from that, there's really not a lot to complain about. Apple is now down after the bounce in the share price last night, 6% since inception, and everything else in rands has been doing extremely well, of course, with the flag bearer being Amazon.com.
Alec, just a quick final question from the rest there. Are dividends received in your web trader account taxed as interest or foreign dividend? I'm not sure if you can.
Wow, that's a little too complicated for me. I would imagine, because they're dividends, that they would be taxed as foreign dividends, and there would be a dividend withholding tax. But I suggest the best way to find out that is to drop Stuart Shady a line at WebTrader, or in fact just give them a call, and I'm sure the team will be able to help you out. Well, that's it. That's our seminar for today. Thanks for the attendance.
Sorry, we're just going to show the disclaimer at the end of the
Oh, there's a disclaimer. Oh, Standard Bank's like a bank, most banks. There they are. Please look at that disclaimer. I'll leave it up there when I jibber jabber. We are giving you a model portfolio. We're trying to help you to start looking at investing offshore. Something that you might consider if you haven't invested offshore yet is to read my book, my Warren Buffett book, Invest Like Warren Buffett. It really is written in language that anyone can understand, and it'll also give you a little bit of a leg up to get into the market.
A quick one before we go, Alec. Bruce wants to know, out of all the shares in the portfolio, if you could, which one would you add investment to?
Right now?
Right now.
Apple, definitely. I think that Apple is so, it's so cheap. The problem why it's so cheap is because it's so big, and it's hard for investors to get the Apple story, because when they look at it, and they look at like 500 or 600 billion market cap, biggest in the world, well, depending between them and Google, which day it is, but the most valuable company on earth, it's just hard for them to get their heads around it. But if you knock off a few zeros and look at these things in perspective, it is, to me, the next Amazon for our portfolio. Amazon has been, it was a sleeper for a while, and it took off. I believe that Apple will be the same. The SE, the new cheaper phone, the cheaper iPhone, has been a roaring success. And watch this space when they move into the motor vehicle market. It will, Apple, as they did, remember, when Steve Jobs launched the first iPhone, up to that point, there were no such things as smartphones. They didn't exist. And yet there's a whole industry now on smartphones. It will be, there is already an electric car, but Elon Musk, as great an entrepreneur as he is, he's still looking at 50,000 vehicles a year that he's trying to produce. He's not really working hard at ramping it up. When Apple go into that market, you can be sure, with 230 billion in cash sitting on their balance sheet, that they won't be looking at 50,000 cars. They'll be looking at an altogether different approach. But it's in the DNA of the company to keep things silent, to keep it quiet, as they did with the iPhone. At some point in time, they're going to be launching their next hurricane on the global business world. That's why I would be, of all the stocks in this portfolio, the one I like the most is Apple.
Excellent. Thanks, Alec.
We'll be back again next month. Thank you very much for being with us today. Remember that the whole webinar is transcribed and kept on Biznews. You can also go and look back right from inception. If you don't believe that we're achieving 25% annualized return, you can go back to month one, which is on Biznews. You can go through our whole strategy, and it will give you our reasoning for doing what we have been doing. But thank you for being with us today.